What's going on, fam? Um, Hopefully you guys can see everything. I'm just jumping on. I'm back. I'm gonna go ahead and back into uh get back into reading the charts to you guys and going over everything. So today I'm gonna just go over the week ahead and just give some insight on kind of what's going on. Hopefully it won't be too long. Just gonna try to do like 15-20 minutes on, and I'll try to drop this on Sundays and Saturdays going forward. So let's go ahead and get into it. So we have continued downtrend on the daily on SPX, and just going and looking at the weekly chart, we got highs here, lows here, right? And our highs around 37, what is it, 30s, 30 highs is gonna be 39.18, lows are gonna be 36.45, right? So going into next week, it's looking like we're going to continue the bearish movement. If we wanted to go any higher than this, we have to break above this this high at 39. So continue to be bearish, and even if we do, we got this order block right here sitting on the weekly, and it's available even on the daily time frame. So we got a lot of things that are still pushing us down, and usually I like to go into the news first. So let me just go ahead and pull up Forex Factory, see what we got going into next week. Monday, pretty light. FOMC member is speaking. Not a lot outside of that. Got core durable goods on Tuesday at 8:30. Powell speaking at 7:30 a.m. So we'll definitely have to consider that on Tuesday, the 27th. Another FOMC Bullard. He's been kind of moving the market a little bit. Then we got consumer confidence at 10, new home sales, the manufacturing index on at 10. So Tuesday we should get our move. And opening up on Monday, we probably will have some stagnance, but it kind of depends on how we react to that close on Friday, because I don't know if we caught that, but like at the end of the day on Friday, SPX, let me get the rest of the guys open. Let's get all three of the indices open. 1, 3. Let's just go with you. Okay. All three of them over here. Nas and Dow Jones. We don't need any of this stuff. Get rid of some of this stuff. Get rid of some of this stuff, right? We don't need it. Don't need this. Don't need this. We saw a lot of movement going towards the end of the day that really kicked this back up, kicked this back up off of this low that we had on each of the indices. And let me see if I saved it. I took some screenshots of some of the price action as it kind of closed out at the end of the day. And here's a photo of the day closing out around that time. So we had this around 1400. These are the orders for price action that came through on the futures around that same time, right? Let me see if we got anything. Okay, so I only got it up going into 230. That 2:45 time frame. That's some ET training stuff that I was going over. Yeah, so I only got it screenshots of it and lining this up with the numbers from where we actually went into at the end of the day. Let me see. I took some. I did an idea on that. And let me just see if I got it. I'll drop it in. I'll drop that in the description so you can see that chart. But around this low, we had about 100K come in on the sell side. And on the sell side with 100K, you would think that would go ahead and sell it off. Not only do we have 100K on the sell side, we had it followed up with, it actually started at 40 and another 40 dropped on. So we had about 180,000 down near that low, entered on the sell side on SPX. And we had some rejection off of this area. So right around this wick, we had, and I remember it now, it was a 36.6188. Right at that low of this wick, there were about 70, there were about 100K of orders that came through around this low. And then right around this low of this wick, we had about 40K that come through on the sell side. So it looks like they bought those back up, right? Now, that's cool because that's implying that this may be likely an order block if it does continue up, because we left a lot of liquidity sitting behind, right? So if we do plan on taking that liquidity out above like 838 or even going even higher into this imbalance right here, back into 38.85, then we have to have that in order. And especially if we want to come in and take some of this liquidity at 40.61 area down up to 39. So that would make sense for us to do that. And if we go into any of the lower time frames, we got some imbalances that didn't get touched on this either. And that's right around 37 to 37.13. And we got this order block. All of that is lining up with the same type of event occurring on the daily and the lower time frames on NAS. There's your gap right here. Daily order block starting at this low on it for a continuation block. Then you got a little imbalance, and then you have your higher order block here and imbalance here. So, and also same thing on US 30 over here. Got your gap, imbalance, order block. And if they do plan on taking some of that liquidity back out of there, that's what they're going to have to do. They're going to have to go ahead and relinquish order flow to the upside so they can take some of that liquidity back, right? And that's okay, because either way, we know we are still bearish overall. And as you saw for the week, going into the week, we stopped on Tuesday. Wednesday, FOMC members, Powell speaking again on Wednesday. So Tuesday, Wednesday should drive us in a given direction. Thursday, unemployment claims, GDP for final GDP, natural gas, more FOMC. So all the way until Friday, we should have some decent move. No, CPI on Friday. So yeah, the whole week, and we got FOMC. So next week should be next week we should definitely have a lot of movement. And that's the telltale sign that that we should get some decent moves throughout the week. Let's check to see if we got any type of earnings coming up. Any earnings at all this week? I don't think so. I don't think there's anybody major reporting, but we definitely got to consider what we got going on. Come on. So like to go to the earning calendar here and just hash out. We got anything crazy we need to consider. 26, we got 89 companies reporting. That's on Monday. Nothing special, nothing crazy, nothing crazy. Nobody big, nothing. Okay, cool. 16, 17, 12, 13. So not a lot. I mean, we can go through it. Nobody huge. Nobody huge. Nobody huge in those days. CarMax, if anybody interested. Bed Bath and Beyond. That might give a sign of some retail stuff, but not anything big. Nike also might give some signs of telltale retail things to consider. So maybe Nike and maybe on Thursday, maybe that might garner some attention. So clean week on the clean week so far on the earnings reports. Let's check what's going on with the COT report. Go ahead and pull that up. I'm gonna just drag this over on the screen. See what they did this week. Pull up the watch list. And pull a chart. So I'm just gonna drag this over. So as far as the COT report goes, they still adding on. Like I told my guys, this is the highest that this is the highest that the commercials have been, and our institutions have been since 2020. 2020, this is the last time we were this high, and we only made it to 133, 832, and we like doubled that now. So definitely they're trying to hold this up. And you can see that the large speculators they're selling, retail selling, but institutional still buying. So that lets you know, of course, this low is significant and they're trying their best right now to hold it up. But Dow just hit its bear market, and we already knew SPX and SPX and NAS were already in that route. So it's a lot of pressure, right? So as far as things to consider for SPX, and I'll go ahead and get individual charts for these real quick. Let's go. We are looking at this particular low right here to get taken out, possibly. That's where our liquidity is. That's where our liquidity. The downside is we do have a little gap right here to consider right into that order block. So right here, little small gap, and then there's this one right here as well. So if we do decide to buy up, these are going to be first points of interest. There's also a small one imbalance right in between there. These are going to be my area to consider. Just, and as you can see, as we go to the lower time frames, we can even refine it even more. I like this area a little better right here. Just, with all that little closeout buying, that might be more of a target to consider. On the 4-hour, if we get a little higher than that. So these will be my primary areas that I'll look for any price action in these areas, since this is going to be a first. And then this is the first time. So we definitely need to consider this, once we get into this little range, but that'll be more of like a shorter term move. I think we go into some of the higher stuff if we do push up. If not, if we go ahead and take out that low, then we got to consider stuff from the weekly. We take out that low, we got to consider this little continuation block right here, probably first line of defense afterwards. And we even got this little liquidity low, which lines right up with that. So that'll be one thing we got to consider. So as far as short term goes, these will be my immediate areas to consider. I don't know if we get taken outside of this. No setups, but just the direction is still heavy to the downside. So even if we get any significant moves up, we still got to come inside of areas that I don't think we're going to be able to trade out of for now, because unless they come in and tell us something on the days throughout the week with Powell speaking and some of the other guys, I don't see us like changing direction with that last candle from on the weekly being so bearish. I just don't really see it happening. If anybody got some other opinions, please drop them in the chat. And we can definitely discuss it, right? This big range, this big imbalance, and this basically will be a very tough barrier to push through. So, and this is lining up with the same thing on the other charts. And I'll go ahead and kind of label this. This is our FG high. Low. We'll consider these three areas. And I don't know, this might be your first time watching any of my sessions, but I trade smart money concepts, but I add my own little twist to it. Shout out to ICT. And shout out to the guys that I've watched online to learn how to learn this. This style of trading is a great style of trading. Every style of trading is a good style of trading. You just got to be able to follow your rules, whatever style you use. I'm not going to judge or say which one is better. It's just the one that works for me. You could be a breakout retest trader. I don't care. It works. All of the strategies work. So if you are one of those traders and this doesn't make sense to you, that's okay. This may not be what you learn that works for you, but at the end of the day, it works for me, and you can still get value from this. So just know that, even if you're watching this and then you're a little confused, so just going into that, these are some of the price areas that I'll be looking at, just going into it. So if we come into this little gap, which this is the closest one we're into right now. So if we open up and I see that price holds within this candle, on the 4-hour, there may be cause for me to look for a little buy to get us to some of these higher areas, or a rejection, a buy to sell inside of one of these areas. So I'll be looking at these areas first. And we can go over to NAS. Go over to NAS, looking at similar situation. You got your imbalance right here, got a little small one right here. We'll go ahead and annotate that. The cool thing is, I think that you guys that do watch this and do trade smart money, you'll get a chance to see what some of the things you can do to help you mark up your charts better. And I'm going to try not to keep this too long, So this is our daily areas right here. We got our order block right here. I didn't mark the order blocks over there on SPX just because, but once we get closer to those, I'll probably add those in. Once price moves up. And I'll probably do like a midweek review. I'm trying to figure out a good schedule for me, so I can get this stuff out to y'all. But I'll drop videos on Saturday or Sunday throughout the week, through every week, and then I'll do a midweek review, just like to get an update, and maybe a Friday closeout. But if I'm doing closeout, this probably will be suffice, so I don't need to. So, and then here is our liquidity right here on the sell side. That's still intact. And we basically made higher lows on each one of the indices. And we operating within these range, this high, this low, and this high for now. So until we get out of this range, I'll stay bearish. And if we do get any up moves, I'll be looking within these areas for those to push us up. Let me fix this. Another thing that we need to consider, which I'll talk about once we go back to SPX. Those are the short-term prices that we need to consider. And then here are the higher prices here. That's on NAS, but we're just going to function in there. We got this order block right here and a little continuation block. We'll just annotate this one. That's our most immediate. Got a little one, but we'll just annotate that one. Right? This one is the value gap high. Gap low. And again, like I said, like if you're new, some of this won't make sense, and that's okay. But if I'm trading an imbalance, fair value gap, whatever the case, however you want to label it, I look at this is on a daily, this is a daily one, so it might not look right to some of you guys. I focus on the high, middle, and the low. And once I see we're at one of these price levels, I got alerts set already, see what's going on. If we do anything to the downside, in this case, because it's bearish, I look for a reaction to price at that particular area, and I take my entries off of that. So my alerts right now, we're just going to focus on this order block being the primary area. And then if we get into the daily on the 1 hour, we'll start to consider some of the things. Before I go to US 30, I want to also bring attention to something that happened at this week right here. This particular week was a trade that I took at 9. What's the high on that one? This one was, it was 38. Let me look at my phone, see what the entry was on that. Give me 1 second. There's some candles I want to bring to your attention. And I just gotta find it. Okay, yeah. So going into Friday's trade was off of this week, right? And we'd already traded back into this small imbalance and traded to the high, right? But the reason for this entry is because at 37.20, we had a 70K order going in here. So this particular area is one for us to consider hard. Let me open up that chart too, because that particular chart is the one that I trade off of. So I got a lot more notes on that chart. I just didn't think we needed to open that one because it's a little cluttered. But I got all my notes on that, right? Okay, so this is the actual chart that I trade off of. So there's going to be a little more info on here than what's on there. So this trade that I took Friday, dang, I didn't write it on here. Okay, I didn't write it. That's interesting. All right, but anyway, at this high, right around the high of this order block right here, you can see it better on the 15. This 23 area and going into 20. So at 37.20, there was a huge order that came through. Another one came through. I don't know why I didn't annotate that, but I that was the reason for me getting into that trade. And then there was also continuation at 40K. So another huge order came in at, you can see I noted it. 40K hit the ask at 37.04.98 and 37.04.23. Another order came in that was bought up at 42K, and then that 100K down here, which was bought up from here. So these particular price areas are definitely 3660, 6188, and 3654, 63. A total of 100K came in. I think 61 was the bigger order. I think that was like 70,000 alone. And then there was another 300 stacked between these price range. So that's why those are going to be important. Then going into this little push up, this was not a trade. That was just me testing something. But this was a trade. And it was just, just let it ride. Peace out here. Peace some out here. Peace some out here. Peace some out. Partial it out at each one of these lows. And then there's still a little piece left in right above this high just to see what will happen. But if it keeps going up, I don't care if it takes me out or not. So I think we do reject, but that's why I still got a piece in it. But these particular levels, I wish I'd taken a picture of this. Let me just check this one more time. Dude, this was 225. So these numbers are a little different because it's the future, so they're going to be a little different with my broker. So you have to kind of just like do the math to get the exact price and go and find the wick and all that kind of stuff. So like that, it'll look a little different as far as what the numbers are lining up to. So like, right, the equivalent of 3676 and 3669, though, that's why we got that. And this is that 100K order that hit the buy. Hit the ask, right? And it sold off originally right around here. And then as it sold off, we had a follow through on the buy side that came in and bought this stuff back up. So that's what we did. And that really was probably sellers closing out that caused this to push back up and get some larger orders, which I didn't catch a screenshot on that. And then let's see, I think I did get the orders at 3220. Nah, I didn't get it. Dang, that sucks, man. I didn't get it. Anyway, let me go back to these charts and I'll just send this over individually in the description. Another thing, a good thing to notice, right? US 30 took the low out. So US 30 took the low out. So US 30 is acting on its own constraints, right? And is already into this order block on the weekly. So as far as US 30 goes, if it continues to go down, NAS and SPX had an order block to deal with, but US 30 already inside of the order block. The targets here would be this order block right here, and then this imbalance right here on the weekly. I don't think we need to annotate this yet, but these are the price levels. I'll hold off on annotating that for another day as we decide whether or not we're going to go down there or not. But I will drag this out. It won't be on the screen anyway. I'll just drag it out. 29, 100, 28.8, 28.5. That sound about right. Going back to the daily though. So again, on the open, it'll be focused on whether or not we stay inside of this candle on the daily. And if we do stay inside of it, that might be a sign that we do push up to take out some of that liquidity. And we got our first imbalance on the daily right here. First imbalance right here on the daily. I wish that as I get a little better with this, I'll see if I can open up the chats for anybody that wants to drop some questions in it. Let me see if I can see that the chat window. I don't think so. I don't think so. I would have had to stream directly from YouTube, but you know, it's all good. Shout out to the 5 people watching. Okay, cool. That's good. Probably people I already talked to, but it's okay. We'll annotate the low of this order block right here. Maybe, you know, maybe that 5 people will turn into 5,000 at some point. Who knows? Whatever. Fair value gap right here again. It's on the daily. I don't know if y'all heard that motorcycle in the background, but that is not a motorcycle. That is a truck. That's actually a SUV that sounds like that. I never heard that before. But yeah. All right. Here is US 30. But like I lost a couple people, but it's all good. It's all good. All right, that's the daily. And the numbers we'll focus on with this daily. We got high to low here. I'll probably come next time with this stuff already marked up, but I figured, you know, with this being a new time, you know, just coming back, if you don't know how to mark up smart money, you know, this might be a chance for you to look at it and learn from just watching my chart. So first imbalance on the 4 hours right here. So again, if we stay inside of this candle, high, low, when we open up, that'll give us a sign and let us know whether or not we come and take some of this imbalance that's here, and then move up higher into this gap right here. Just gonna put the low. This from the 4 hour. These are from the daily. Got this order block. Those are our short-term targets. And right now, that's probably all we need to focus on, especially until, you know, going into the open, like midweek. By the time midweek come, we should, if we do open up to push up, we should have tackled, you know, some of this order flow and knock some of this stuff out. So I'll just come back on like Tuesday, Wednesday, probably Wednesday, and give an update. And then you'll get it. I'll send out another video on Saturday. So these are the areas I'm focusing on for now. Long-term order blocks on the daily, and then the imbalance that was left all the way over here. That'll eventually be targets, but for now, we don't need to talk about it yet. We should be able to answer some of this stuff before then. So I'll drop those charts in the chat. Copy this. I'll just leave that alone. And now I'll touch on dollar right quick. Dollar. Let's open up with this one. What is this? This is something that I'm just testing. We don't need that. Testing this stuff. Dollar. Did I just open up Bitcoin? I did. Didn't mean to. Dollar. All right. Dollar. Wow. So dollar, let's just clear out all this stuff. It's an old chart. We'll look at dollar versus EU. And then dollar versus EU Swiss. None of this stuff. Similar, right? We can't be bearish on, we can't take sell-offs on dollar right now at all. Dollar is following the interest rate. And as the interest rate gets higher, dollar gets higher. As the interest rate gets higher, EU gets lower, GU gets lower, AU gets lower. U Swiss gets higher, U CAD gets higher. You know, it's just gonna follow. U ZAR gets higher. You know, it's just gonna follow. You know, because the dollar is stronger of the pair, and just like the following days, this is our impulse candle to the downside. We can trade up all we want, right? Until we exit the high of this, you got to stay bearish. Same thing, you know, you can take these short-term moves throughout some of the days, but this candle is in control right now. This candle took all of that out. This candle continued, right? Next day, this candle pushed up. Yeah, it bought up halfway into it, tapped these lows again, and then rejected. And then even this candle, the high, the low, we stayed inside of it. We continue to sell. Same thing happened over here. And it's looking like 115 is going to be on dollar soon, right? So we got to go to the monthly chart to look at some of the stuff on dollar, right? On dollar, this has been my target right here. On dollar. Let's see if I can bring it all in the same window. You don't need this. This level. And this level. It's your gap right here. And you know, if you guys do watch ICT, please continue. Like he's dropping a lot of sauce on the mentorship. Um, some of my guys that are in I Am Academy, you know, shout out to you guys too, you know, if that's where you're following from. Shout out to you guys, man. Shout out to any new subscribers I get. I appreciate, you know, go ahead and hit the like button. Subscribe, like, all that stuff. I'm trying to work on my YouTube game. But you can already see, you know, with same time on dollar, we reached the monthly fair value gap. What are we doing over here? What are we doing on EU? What are we doing on EU? We reached the monthly fair value gap on EU. This gap was created a long, long time ago, and they're coming back and using it, right? So we got similar situations, right? This point of interest is happening at the same time that dollar's point of interest is reached at the same time. The only difference, dollar's in the middle, EU is at the low, at the high, right? This was created in 2002. That price gap was created in 2002. Same thing on dollar. It's created in 2002, and they're using order flow from 2002 to trade against and trade and use to trade. So like this stuff still is important, even 20 years later, we're using this stuff. So I think we reach the high and breach it to wick that, which means that if we do that, EU comes down to 95 or 93, one or the other. I won't go into any details on that, on the lower time frames, because again, if we stand inside of this, we open up inside this and we don't breach the high, we need to look for sales. If we breach the high, then we can start to change our opinion. Same thing over here. If we open up and stay inside this imbalance right here, we need to consider continue buying on dollar in any dollar pairs. Just for, purposes of comparative analysis, as dollar pushes up on the daily, we reached our point of interest on EU Swiss, right? EU Swiss's point of interest is liquidity, right? As dollar pushes up to a fair value gap, EU Swiss is pushing up to a area of liquidity, right? This liquidity got built in 2022. This also is an area of interest, and we still already inside of this liquidity, of this fair value gap. So we could possibly be looking to tackle the high of this as a target, which would still line up with dollar pushing to 115, right? And it makes sense. This makes sense. This makes sense because this is where our liquidity is from these areas, right? We've already met the requirements to continue higher. We came inside this fair value gap. That high is up there, and the low of it is here, and it's held for the most part. it's rejected, and you can see where it's rejecting is right around the middle. The bulk of these candles is happening right at the middle. So it's hell. So at this point now, it's probably, if this does continue to go up, it's probably time to breach these areas of liquidity, these swing highs. You see 98, 33.2. Most of the bodies are sitting right around that area. So if it's going to go up, we might get a swing down to hold a fair value gap. If we do hold this fair value gap, or we just run through these highs, then we're going to have to look for 99, 32.6. So simultaneously in a similar area, this is the middle of the monthly. That dollar sitting at 113.399. It's the middle of the monthly fair value gap. This is at the middle of the daily fair value gap, where his high is, where it's wicked. So that's why we got to consider that. So I'll drop the charts. And I also, I'm gonna touch on one simple thing too. If you're an Apple customer, you no longer have access to Metatrader 4 and 5 if you don't have it on the phones already. If you got it on the phones, you should be good. But anytime there may be an update, just know you could possibly lose your access to your Metatrader. So I would highly suggest that you switch to using the desktop app. I got a video in my library that I believe is already public. If you want to learn how to put in and enter trades on your desktop, I would highly suggest that you watch that video. I go in doing examples from the phone, doing examples from the computer, how to enter the trades, how to enter stop loss and targets, and what the trailing stop use is, and how to use it on the desktop app. And to me, you have to be, in order to be like a professional trader, I believe you should be using the desktop app in the first place, because you can't do everything that you need to do on the phone. Like making adjustments on the fly, it's just so much easier to do it on the desktop, and not even using a tablet, but a desktop to have a mouse, to use that. I can honestly say that some of my biggest trades that I've lost have happened because I was playing around on my phone trying to trade, or I just wasn't focused because I thought I could just trade through the phone and just do whatever. But the phone means that you're probably occupied doing something else if you're using your phone to trade. So that means you're not fully engaged, right? But if you're sitting at your desk with everything lined up, like I got my screens, going lined up, and my hand, I had surgery, but you got your desk, you locked in, you got everything you need, you focus, you don't have all the distractions of messages coming through. And I think it's just a better way to lock in on what you're doing. You got, if you like me, you got multiple screens, and it just makes sense. Oh, sorry, I didn't know this cup was back here the whole time. It just makes sense, right, for you to just dial into it if this is going to be what you're making money off of. So take this approach. Don't just play around on the phone. I've been telling people this for years and years and years, man. So on that note, I'm gonna go ahead and save everything, and then I'll drop the links in the video description, and I'll try to see if I can mark everything up, and so that way you can go ahead and just jump straight to stuff. But peace out. See you in a little while.